Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 3rd, 2026. Let's dive in.
Market overview. Well, Sarah, buckle up because we are looking at what could be one of the most historic openings for Wall Street in recent memory. If you thought yesterday's recovery was something, wait until you see the gift Nifty this morning. It's currently trading around the 26,086 level. That's a massive premium of nearly 945 points from the Nifty Futures previous close. We are essentially looking at a gap-up start of nearly 4% for the Nifty 50 and the Sensex. This euphoria is almost entirely driven by the bombshell announcement of a trade deal between India and the United States. Analysts are expecting the Nifty to blow past the 25,500 hurdle immediately and head straight for record territory. In terms of market movers, we're keeping a close eye on the heavyweights. Reliance, HDFC Bank, and ICICI Bank are expected to lead the charge, but the real action will be in the broader market where short covering is going to be intense. In the F&O space, the cues are screaming bull run. While foreign institutional investors, or FIIs, have been net sellers recently, this trade deal is the exact overhang removal they needed to come back in droves. We're expecting a record day of foreign inflows to counter the recent outflows. It's a total shift in sentiment from the cautiousness we saw just 48 hours ago.
International markets, it really is a sea of green across the globe, Joe. Looking at the U.S., the S&P 500 and the Nasdaq are riding high on the back of President Trump's announcement. It's not just about the India deal, there's a general industrial rally happening. We're seeing investors rotate into cyclicals, hoping that these trade deals signal a new era of global manufacturing growth. Over in Europe, the FTSE, DAX, and CAC 40 are all expected to open higher, following the lead set by a resurgent Asia. Speaking of Asia, it's been a wild ride. South Korea's Kospi actually hit a 5% jump this morning, which was so volatile it triggered a temporary trading halt, but this time on the upside. The Nikkei 225 in Japan is up over 3%, fueled by a tech rebound and incredibly strong bank earnings. In the commodities space, we're seeing a fascinating development. Silver is being dubbed the GameStop of 2026. It's seeing massive surges followed by dramatic reversals, behaving more like a meme stock than a precious metal right now. Gold is also recovering after a 2-day slump as the dollar stabilizes. And interestingly, currency futures show the Indian rupee is set for a significant reprieve against the dollar, thanks to those tariff cuts.
Business story 1 and 2. Coming back to India, let's talk about the specific companies that are going to feel the immediate impact of this 18% reciprocal tariff agreement. First up, the auto, ancillary, and engineering sectors. Companies like Bharat Forge, Sona BLW, and Samvardhana Motherson International, or SAML, are front and center. With U.S. tariffs on Indian exports slashed from 50% down to 18%, these companies just became significantly more competitive in the American market. We're expecting double-digit gains in these stocks today. Secondly, keep your eyes on the textile and food export sectors. This deal is a massive win for Gokaldas's exports and Wellspun Living. For years, the high tariff walls made it difficult for Indian textiles to compete with Southeast Asian neighbors, but that's changing today. Also, don't ignore the shrimp play. Avanti Feeds and Apex Frozen Foods are set for strong buying. The U.S. is a primary market for Indian seafood, and this trade deal removes a major cost barrier. These are Nifty Next 50 and Midcap 100 stocks that could see some of the highest percentage gains as the Buy American for lower tariffs trade-off starts to be priced in by the street.
Business story 3 and 4, turning our attention to the global stage, we're seeing a major power shift in the tech sector. South Korean giants Samsung and SK Hynix are on the verge of eclipsing the market caps of China's top internet firms. This is a huge milestone. It shows that the AI boom is shifting its weight toward the hardware and memory providers in Korea and Japan rather than just the software platforms in China. In the US, the focus is on AI infrastructure. There's a specific focus on AI data center power stocks ahead of Tuesday's earnings. Investors are looking for companies that provide the cooling and electrical grid solutions for these massive data farms. And we can't ignore what's happening in the Middle East. Saudi Arabia's Tadawul exchange has officially opened itself to all types of foreign investors. The Saudi regulator is even reviewing foreign ownership limits. This means we might see some global capital being reallocated between emerging markets like India and Saudi Arabia as both regions compete for that hot money from the US and Europe.
Economics and geopolitics. Now let's look at the why behind all this. This trade deal isn't just about tariffs. It's a massive geopolitical pivot. As part of the agreement, Prime Minister Modi has reportedly agreed to stop buying Russian oil and instead buy American at a much higher level. This aligns India much more closely with Washington's energy interests. For the RBI, this is a double-edged sword. On one hand, the rupee will strengthen because of the trade optimism, which helps with imported inflation. On the other hand, shifting away from discounted Russian oil could impact our current account deficit if American crude comes at a higher premium. Meanwhile, in the U.S., the market is still digesting the nomination for the next Federal Reserve chair. There's a sense that the Fed might stay dovish to support this new trade-heavy economic policy. It's a complex puzzle, Sarah, but for now, the markets are choosing to focus on the growth potential of the Indo-US corridor rather than the geopolitical risks.
Key takeaways. So, what's the bottom line for investors today? First, expect a record-breaking gap up. If you aren't already in, chasing the Nifty at a 900-point premium requires caution, but the momentum is clearly bullish. Second, the export theme is the trade of the day. Focus on auto components, textiles, and specialty chemicals that have high U.S. revenue exposure. Third, watch the rupee. A stronger rupee will be a tailwind for importers and could lead to a rally in banking stocks due to improved liquidity. And finally, keep an eye on those volatile metals. Silver is acting erratic, so keep your stop losses tight if you're playing the commodities market. It's a day for the history books, Joe.
That wraps from today's update. I hope you gained useful insights.
Add your thoughts in comments and follow for more such updates. This is Sarah.
And Joe, signing off.